right, what the heck happened to the stock of Paychex today? Payroll processor and outsourced human capital management company. They cuts 1 out of every 11 paychecks in the private sector. This morning, Paychex reported what the street thought to be a mixed quarter. Inline earnings paired with also slightly lower than expected revenue, which would have been fine, but people thought that maybe their full-year forecast for revenue, a little light. Got to find out. On the other hand, their earnings forecast was fantastic. It seems crazy to me that the stock plunged 9% today in response to those numbers, making it the worst performer of the S&P 500. I mean, some of this disturbance might be because the company recently closed on a $4.1 billion acquisition of Paycor, a company you know I like very much, and maybe that makes their financials a little harder to understand today. 9% sell-off feels excessive to me. Hey, but let's check in with John Gibson, the president and CEO of Paychex, to get a better read on the business and the broader economy. Mr. Gibson, welcome back to Mad Money.
Jim, thanks for having me back.
Well, you know, John,
Mama told me there'd be days like these.
Yeah, well, look, let's puzzle through this. And I like that because that's where I am. I went through everything without looking into stock price because I like to do that. I like to think what would happen. And I saw there were some numbers that seemed, well, you know what, that's because of Paycor. That might be a little bit harder. But the margins were really good. The revenues were really good. The retention was really good. The things that I look at, okay, the ones that forecast the future best. Am I looking at the wrong? Am I looking at the things that are too positive and not thinking enough about the negatives?
Well, Jim, I think it was, to your point, there's a lot of things that could confuse people about our results with both the Paycor acquisition kind of mixing some things up. When you look at it from the quarter perspective, it was in line with expectations. We really had a solid financial performance this past fiscal year, and we made a big strategic progress with the closing of Paycor, and then we completed the first phase of all the integration activities in the first quarter. As you said, we had double-digit revenue and adjusted operating income growth in the quarter. Full-year organic growth, if you take out a compare of the ERTC program, we continue to deliver constant Paychex type of deliverables. And then you mentioned margin expansion. We expanded margins. You take the acquisition out, 250 basis points, reaching 42.5%. That's way above anyone else. You said we improved our retention rate year over year. We raised the expectations on cost synergies to $90 million for the full fiscal year. And then for next year, we just entered our new fiscal year in June. Our revenue guidance for next year is between 16.5% and 18.5%, and adjusted earnings is 8.5 to 10.5, and the consensus was 8, and we committed to 43% margins next year adjusted basis. So, look, I look at those numbers and I feel pretty good about what we accomplished last year, and I personally feel very confident about where we are it being positioned going into this fiscal year.
I could not agree more. I thought the stock was going to rally into the close because it was so ludicrous that it went down so much. So tell me what it's like working with Paycor. How are we integrating it? How's it? Who you keeping? How do you keep the morale going? Because you have a very good culture there, and I want to know how you're integrating.
Yeah, Jim, that's one of the things I've probably been most happy about is the integration of the two companies from a cultural perspective. As you know, last quarter when we talked, we had been doing a lot of planning jointly with some of the senior members of the team. 2 members of the senior team have joined our executive committee. And we actually, because of the integration and feeling of strong culture, we just decided to move more rapidly. So immediately after the close, over the 6 weeks, we reconfigured the sales and marketing organizations across the country. We reintroduced 2 programs, a Partner Plus program for our brokers. We've already signed up 1,000 brokers to help begin to take our message to the marketplace. We rolled out a new portal for accountants called our Paychex Partner Pro. And we've basically expanded our sales coverage going into this fiscal year. We did all of that in 6 weeks.
Wow.
And that really is a testament to the great work that the team did jointly together and our confidence that together, both the teams, Paychex and Paycor, are stronger and better together. And like I said, I think we're very well positioned to deliver stronger returns and long-term value for our shareholders.
All right, so how's the client base doing? I know that you have such a great view because of the small business employment. I saw you on Squawk, but I didn't understand this micro bankruptcy issue. Is this something I should worry about?
Yeah, Jim, look, as I said, our client retention was actually up year over year. And I would say if you absent some anomalies we saw in the fourth quarter, which I'll talk about, we would have had a fabulous retention year. So I think the value proposition we're delivering is fine. What we saw in the fourth quarter, soon after Liberation Day, was a spike in bankruptcies and financial distress in the micro segment. Think entrepreneurs, kind of small businesses. Now, what I will tell you, that's not uncommon when we see an external shock. People just kind of throw it in. The other thing that often in that time of year can happen is you have a lot of seasonal businesses, think landscapers, lawn people, that all of a sudden are about ready to get back into business. They may look out in the future and say, you know what, I'm not going to do it this year, and they shut down their business. So I'm not overly alarmed by that. When you look at our index in May, we saw good, moderate growth. We see no signs of recession. And Jim, next week we're going to announce June, but I'm going to give you an early read. I think what you're going to see in June is exactly the same thing. Moderate and stable growth in small businesses, continued deceleration in wage inflation. Look, I think there's a lot of optimism in small businesses right now. What they're waiting for is clarity. Right. And I think if we can get some clarity on taxes, clarity on tariffs, I think that there's going to be a lot of optimism and really propel growth in small businesses going into the rest.
With your connections at the Fed, because of the work you do, you're sharing this 4-year low 2.77 wage inflation number, right? Because that's a number that would make the president say, hey, listen, here's a fact about why you should cut. Not just jawbone, but here's a fact.
Yeah, I think, Jim, look, I think the Fed chair made some comments in Congress yesterday or 2 days ago. I've kind of lost track with time. But I think he made some comments relative to the fact that one of the challenges the Fed has right now is they look at the underlying data and probably have some things to be pleased about. And then they have this uncertainty of what are the impacts or how is the whole tariff thing going to resolve itself. So there creates a degree of, well, should we move or should we not move? As I said, clarity is important. That's one of the things we decided to do with our integration with Paycor. We decided, let's move, because what we couldn't have for our employees, our clients, and our strategic partners was a lack of clarity. So we got it all out of the way in the fourth quarter so that they had clarity going into this fiscal year. I would give some advice to our policymakers. Let's bring some more clarity to the situation, and I think we'll see entrepreneurs take off.
I have advice to the analysts who cover. They don't look at the clarity that you're providing, because that's why the stock should go higher. John Gibson, President and CEO of Paychex. John, well explained.
Thank you, Jim.
Mad Money's back after the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.